We start off with the market bounce. The Dow, S&P, and Nasdaq seeing their best day of the month. The bullish move coming as a major bearish sentiment indicator hit a 7-week low. Consumer discretionary among the leaders up more than 3% today. One of its hardest hit members seeing a revival. Target surging almost 4% today. CEO Brian Cornell delivering an upbeat tone for the year's second half, telling the Economic Club in New York and our own Becky Quick that back to school, back to college, and even Halloween shopping should boost sales, at the same time acknowledging a challenging environment for consumers due to inflation. Target stock down about 42% over the past 2 months. Now, remember, they warned about inventory levels. Last month, they got crushed. So now what, Karen? What are we supposed to make of Target? I mean, he also talked about the idea of coming out just weeks after the quarter and saying, you know, we're going to mark down a lot of the inventory to get ahead of the problem.
Mm-hmm. That second shoe, that second drop down was really the one that was discomforting because it came so shortly after this giant bomb. And you would have thought, if you're going to have a huge, bad news, you better just put it all out there. So were they overly optimistic or did it seem to get worse? My guess is that it surprisingly got worse quicker than they thought. So I guess, he's going to do what he has to. I think that guide down of the margins from originally what we thought would be 8%, then came in at 5 and change, then it got down to like 2.7. Hopefully, that's big enough that if they actually deliver in that neighborhood, that would be somewhat of a floor for the stock because people think, all right, the worst is behind it. I don't think, though, that it's a one-quarter event. Mm-hmm. I think this much inventory plus trying to balance back to school and then going into the holidays is going to be a difficult endeavor. And so I think we're looking at more than 1 quarter of pretty compressed margins here.
The nice thing about listening to Brian Cornell is this is a guy that's giving you a vantage point into not just the consumer and but logistics, transportation costs. He even rambled on, not the right term here, a great Led Zeppelin song, but he talked about the Biden policy on tax cuts and saying he kind of snickered in his own way. That's my interpretation of that. Transportation costs up, but the inventories and inflation at historic highs, to me, is a message that I think we're going to hear from other companies. The nice thing about the message today also, though, was he did say he expects a massive back to school, a massive holiday season. Yeah. He didn't say anything about the consumer being dead. He really pointed at that this has been an impossible time to manage inventories. I think we've all said this on this desk with regards to other sectors as well. The inventory dynamic is going to be extraordinary. What company isn't at some point going to be stuck with bloated inventories? And I think that's the state.
Yeah, my takeaway looking at the headlines, and you mentioned, Mel, the stock's up 4% from a 52-week low, and it's down 35% or so. It literally looks like a half a tick on the chart. It doesn't really look that substantial. I'd say the headlines look very qualitative in nature, right? When you think about it, I mean, they're really. So we had, that guide down a month and a half ago. Then we had the pre-announcement, and they were all like, quantitative. There was a lot of data. There were guidance. And this is like really how I feel. And I'll just tell you this, going back 25 years in my career in this business, when you start hearing, second half loaded, it's not usually done in the second half. I'm just saying. And to your point, Karen, you said that these sorts of inventory issues, dealing with all of the things we're dealing with supply chain and inflationary pressures, they are not 1 quarter things. So again, does it make sense to press stocks in a market like this that is really negative right now? The sentiment is horrible. The sentiment is horrible in a stock like this, which some people will say is ground zero for this latest leg lower. No, it's not. Let them breathe. But see how they act. Like, to me, if this stock can't rally tomorrow after all the headlines and the dissecting of this sort of news, and then people are walking away somewhat positive, then it's going lower.
Also, to Karen's point, I mean, the consumer may buy all those things. I mean, Guy, you're probably in need of a new costume for Halloween at this point. But the margin on that costume for them is going to be razor thin. I mean, he was talking, first of all, Target is the second biggest net importer into the United States. And he was talking about shipping costs, logistics costs because of fuel going up $1 billion overnight. He used the word overnight because of what has happened in the energy complex. So, yeah, they can sell all the costumes they want. But the question is, what are their margins on it?
Well, first of all, sister, not the costumes that I buy. There are a lot of margins in my costumes, number one. But we'll talk about that as we get closer to October. Now, I think, listen, this is my sense about Target quickly. I mean, they said everything they needed to say. If you're buying Target here, which, by the way, I think you can, you're basically betting that they're not going to go 0 for 3. They're not going to strike out. They had 1 strike with the quarter, 2nd strike with the guide. I don't think it's going to happen again. I trust Brian Cornell's judgment. And I'll say this in terms of valuation, even if it's only $11.5, $12 next year's earnings, you're talking about a stock that's trading at what, 12.5 times-ish forward earnings. Not cheap, actually probably as low as it's been on valuation in quite some time. I don't think you're going to be rewarded for it over the next couple months, but come fall, I think you're going to say, you know what, I'm glad I bought Target in the 140s. That's sort of my sense right here.